Welcome to the Unmuted Podcast. My name is Jeff. I'm the host of the podcast, and we talk about all things HR, talent, HR tech, world of work, AI, everything, pretty much. All of our guests are all experts, HR leaders, technology leaders, practitioners, in-house, external, so forth, mostly from North America, but sometimes we do have some from overseas also. And so this is a podcast that lives on my website at GoScaleHR.com, also on YouTube as well. So if you want to check it out there, please do always chime in, share some comments. That would be great. And so this is a really interesting episode, as I always say that, which I'm probably a little bit biased, so I don't really apologize for that. But the topic is called Why the Old HR Playbook is Dead, Managing Talent Like an Asset, Not a Cost. And so for those of you who know me, I've been around for a very, very long time. I don't practice HR anymore, but this is always something that was always challenging and, trying to make a business case to get more credibility and so forth for the HR profession. And so before I bring in both of our guests, yes, we are doing a dual guest episode today. And there is a reason for that. But I just want to make just a couple of points first, just to frame the conversation and topic, and then we will get into our key questions. And so I guess the first point that I came up with was this. For decades, HR leaders have been challenged to become more commercially minded and more connected to business outcomes. Okay, so really, what that really means is being really, business minded, business focused. Makes sense because HR is a business function, therefore they should think like that. Yet in many organizations, HR is still working to be seen as a truly business critical value driving function, not just a support one. Okay. I think we've probably been saying this for 30, 40 years, maybe even longer. But that still is quite true now. So that's the first point. The second point is, I think we're in a pivotal moment where the pressure that we are dealing with now is a bit different. So obviously there's this thing called AI, and if you've never heard of it, then you've probably been living under a rock for the last 2 years. But AI is reshaping work. Budgets are tighter, and senior leadership teams are asking harder questions about productivity, workforce value, and return on talent investment. This may be the moment that demands a more modern, performance-oriented HR playbook because the old one is no longer enough. So that's the frame. There's a lot to talk about here today, and our guest, Daneal Charney Konstantin Tskhay, will help us break it all down. So welcome, Daneal and Konstantin. Thank you for being here.
Thank you, Jeff.
So prior to diving into our key topic, because there's a lot here, so maybe each of you just give us a brief overview of what you do, but I just want maybe you can touch on, there's some new research that both of you have been working on, and I'd love to hear all about it. So maybe Daneal, we'll I'm going to start with you.
Okay. So, Jeff, I just have to say that I love Unmuted, and I've followed you. I think we followed each other. We're big fans of each other. And, shout out for all you do as a community builder, because you are just the bomb.
Thank you.
Okay, so I am the founder of X. I'm a leadership coach and facilitator. You may know me as an executive in residence at Mars for many years. I focus on startup CEOs and founders, and where I help them, and this is related to our research, really where I focus is their leadership effectiveness and performance. I am obsessed with performance, and I believe that our roles as CHROs are to optimize performance and the long-term value of people. And I have been obsessed for many years with this question that you, Jeff, you started to ask, is how do we quantify the real impact of people, and how do we know what the ROI is? And when I met Konstantin, it was like the perfect match to start doing this research, which we've done with 84 Canadian software companies, to really start to quantify what is the lifetime value of an employee. So over to Konstantin for his intro.
Yeah, absolutely. So my name is Konstantin Tskhay. I'm managing partner of Tskhay & Associates. It's a boutique management consulting firm focused primarily on optimizing organizational performance and performance of the people, as well as working in that transition between strategy and operating model. A lot of companies are focused on the strategy, but not a lot of companies are actually doing an op model from the consulting standpoint anyways, because it's one of those messy scenarios. But given my background as a researcher and a lover of data, it essentially falls into my alley, which I enjoy quite a bit, is going in, figuring out different processes, building out systems. And naturally, when Daneal and I started talking about the ELTV construct, the employee lifetime value, a few years back, it was an intriguing proposition about thinking about talent in a very different way from the perspective of quantifying and almost marrying that financial lens with the talent lens. Something that we've been talking about in the field of HR for quite a bit of time, but haven't had an opportunity to do. I view this research ultimately as a partnership between Daneal, myself, as well as the TAP network, who also helps us approach a number of individuals and companies to collect the data. And of course, thank you for having us on your podcast, Jeff, because that also allows us to complete this arc, ultimately to disseminate the information to the community and share some of the things that we found. And hopefully everyone will find it's pretty interesting and exciting. I think Daneal and I find it to be pretty cool.
Well, you know what? First of all, thank you both for that. I think the one nice thing about this, it's supported by TAP, obviously, which is a fantastic nonprofit based in Vancouver, but also that you really focus on Canada, the Canadian tech industry, which is nice. And so, I mean, 80, quite a few. Are they all a similar size, or they're all over the place? Maybe tell us a bit about the demographic.
They are all, predominantly, they're software companies. They're more than $1 million in revenue, and $1 million, and it really goes up to more than 20 million. But yes, they are comparative companies at different stages. And obviously we slice and dice the data, but it's the companies we work with.
Okay, perfect. Oh, okay. So let's get right into the first question, because that's a really good one. Okay, because this is so your research really talks about the idea of treating talent as an asset rather than a cost, right? Obviously, which is a good thing. What did the research uncover that makes this shift impossible to ignore now?
Yeah. So I'll talk to this, and I'm sorry, I have to look down a little bit because it is research. And so there is a lot of detail, but there's two big reveals. The one is really around time to productivity, and the other is around retention. So the first one, time to productivity. So it really interesting here that what we really found is there's a bit of an incorrect assumption around time to productivity, which really leaves money on the table. We asked this question, how long does it take you to get someone to productivity if they're an executive, a sales person, or an engineer? 3 different questions. And we got the same answer. 6 months, right? So this doesn't reflect reality. It doesn't reflect the role complexity, which would be wildly different. We would never treat a customer like this and just say, 6 months. It wouldn't be good enough. Companies are obsessed with their whole CAC, right? Their cost of acquiring a customer. So what it told us is we need to get really precise and really good at figuring out what is the real time to productivity and what does that process look like. Otherwise, we're delaying revenue, we're overpaying for ramp up, and so there's a huge opportunity. Now, add in what you said about AI, Jeff. And, we know ramping up, there's a huge opportunity to use AI, whether it's like making that new grad who's in sales, using AI for call coaching or to auto generate some follow up so they can, go from new grad to almost like, a junior employee in rapid time. That's really what we found, is that, this onboarding needs to be a lever to move employees from a cost to contribution really, really fast. And we need to apply AI to accelerate learning and output. So that was kind of the first one. The second one was around retention. So retention is not the opposite of, it's not like, right? Like there's something magical about retention. And what we found is when companies crossed the 80% retention, it was like compounding interest, right? Like in our bank account, compounding interest. In fact, companies who crossed that 80% were their employee lifetime value 3x. So we saw like something like this, and then like that. And isn't that what we all want, right? So if you're over 80%, what we saw mathematically is you have this, if you can keep an employee for a long time when they're at peak productivity, right? You can have that sustained peak productivity. You can have uninterrupted value creation, and basically really just maximize that investment. Whereas we know below 80%, we've all been on that treadmill. We've all been on that hamster wheel where Konstantin called it replacement drag. And I think that's a good way of putting it, right? It's just like we're focused on replacing, we're hiring, we're constantly training. Capital is going to replacement instead of the growth of the company. So retention for us is not an HR metric. It's a financial lever, just the same as we obsess about now customer retention. We know how important customer retention is to businesses right now. They're obsessed with the retention numbers. So yeah, retention is just a great unlock of employee value.
Yeah, I mean, it's a great answer. I just have a quick question for our audience. So you mentioned that the term the employee with the life, ELVT. Okay, so what does that stand for? And then what is it?
Konstantin, do you want to take this one before the next question?
Yeah, as you were speaking, I was about to jump in as well, because we keep saying employee lifetime value from the start of the podcast, but I don't think we actually defined it officially. So the employee lifetime value, this was the concept that Daneal actually brought to me, and we talked about it at the conference. It really comes from the customer lifetime value. So if you think of yourself as a customer of a business, what we want to do as a business to make sure that you come back on continuously into the business. So if I own a restaurant, I want to make sure that you're coming into the restaurant and spending some of your paycheck with us from some of the share of the wallet, so that we are able to generate revenue. If you flip it on the HR side and operations side, employee lifetime value is ultimately how much revenue does each employee generate over their lifetime. So this is where that connection to retention ultimately becomes super important, because if somebody spends more time within the organization having higher tenure, then naturally they are going to be generating more lifetime value over their tenure. And that is in consideration of the costs. So from the concept perspective, what we're looking in here is how much revenue per FTE this person is generating, how long they're staying within the organization for, what is the cost for the employee. So in here, we're looking at salary, benefits, as well as bonuses. How long does it take them to ramp up? Because say in the first 6-9 months, they're probably not working at 100% productivity. So we want to make sure that we're adjusting for that. And ultimately retention, right? As the retention is improving within the organization, tenure is improving as well. And that is improving the employee lifetime value. So that's a little bit of that framing. And I think one of the contributions from this research, going back to your original question, is the introduction of this particular construct to our HR community to think about employees not only, hey, I see 80 or 70% retention, but go into that next step around, okay, well, so what? What does that actually mean from the financial terms?
Yeah. So why do you think that HR has struggled to make this shift for so long?
Yeah. Well, I want to take this question in a more sort of forward-looking point of view. And I think of, when I was in EIR at Mars, I dealt with hundreds of different founders and CEOs. And I was thinking about this question in terms of like, when was I creating value for them? When were they giving feedback that, the way I was interacting with them was unlocking value? And how I would answer that question is HR needs to take off its advisor hat and its solution hat and put on its consultant coach hat, because that's essentially what I was doing. And because I had to do that as an EIR, because I had an hour to make an impact on the CEO, I was really getting the context of their business, understanding the problem they were going through, and just helping them solve business problems, right? And so I was listening and probing. And the reality is people underpin everything in a business. HR is not a department. It's about people's performance. So in being a coach and listening and probing, I was able to really understand the business problem before I went to solutions. And I really dropped the HR terminology, dropped the HR solutions, and just leaned into what problems and being a good coach, right? Being a good executive. I think being a good executive is just trying to help the team solve problems together. And I always use this term, and I think I got it from coaching, like meeting your CEO where they are, right? Like, don't try and go over here. Just meet them where they are. Well, what is the problem they're solving? How are they feeling today? Like, what's on their mind? And bring, your knowledge of how the business makes money and the unit economics, and be fluent in the financials and understand the intangible assets, because HR just, it's not really HR. You, as having an HR background, have a great role to play, whether it's, brand reputation. We know that that's all about people and protecting. AI is all about adoption and change and communication. And we have that, right? And IP is all about, we want to retain the people who create IP. We want to protect IP, and we have policies. Like, we just have a lot to bring to the table if we just lean into being a good executive and a good business leader.
Do you think that part of the challenge might be, as a community, as an industry, we're not very good at understanding business? Do you think that's part of it? Because that's sort of what I've seen over the years, is that we have a lot of really good technicians or HR experts, and really good at all that kind of stuff. It's a very broad field, right? But to actually apply it in a true business sense, so that it makes sense for the business that they're working for. I don't know. I always thought that might have been the biggest problem. What do you think? I mean, you got a chance to connect with 84 different tech companies.
I mean, from my perspective, it has taken me time as an HR leader to realize this and to kind of throw away the HR solutions. I am very interested in how companies make money. If you're not interested in that, you might not lean into that. Early in my career, I was very scared of the numbers, scared of looking at the balance sheet. Now I'm not. I mean, I did a Rotman thing. So I think if you have the interest, then just go and learn it. Don't get scared of it, right? Like, take it home, ask the questions. Don't be afraid to look stupid. We have to learn, right? Konstantin, what do you think?
Yeah, absolutely. So one of the things, and Jeff, I was reflecting on this right before joining the podcast as well. It's a very interesting question, but to me, a lot of times when we're thinking about HR and people and cultural leaders, we're sort of thinking about the culture of the organization, but we're also sort of live within our own HR culture, which does have some expectations both from the business around how do you interact with HR, but also for HR professionals around how do they handle themselves on the ongoing basis. So from that standpoint, you can actually create that self-fulfilling prophecy where if the business is viewing HR as just programs and initiatives that are going to be building only engagement and bringing talent into the fold, then would HR professional, by the power of kind of self-fulfilling prophecy, kind of start assuming that role over the ongoing presence within the organization. But perhaps it is a challenge for us as HR professionals is to go out there to the business to open up those doors and change that self-fulfilling prophecy so that the businesses start viewing us more as participants in operations and in financial aspects, and not just looking into running engagement surveys on the ongoing basis, so to speak.
Yeah, absolutely. And I think having really good data and research like what you worked on is critical for that, obviously. Okay, so the next question for you both is this: many companies still manage people through headcount, compensation, and turnover metrics. And so it's sort of like almost like an isolation type of thing. So what does your research suggest they may be misunderstanding about workforce value?
Yeah, it's a great question. Our research ultimately examines all of the metrics that you have mentioned previously, and we're integrating them all together and finding some insights that some of them Daneal already mentioned, and we do have some other ones that are also quite interesting. Once the report actually comes out, I definitely want to invite all of your audience to come in and check it out. But what was especially interesting, that all of the insights sort of point to the same idea, and that is the strength of the operating model ultimately is what is going to be driving a lot of the metrics from the productivity perspective. So a lot of times when we're thinking about talent density, onboarding speed, retention, engagement, cost. One of the findings, for example, was that it's not necessarily that the highest paying companies are the most productive. A lot of times it is going to be the companies that are optimizing their process and systems. And so all of our insights ultimately point to the idea that operating model, understanding the processes, finding the leverage within the organization is what is driving a lot of the outcomes for the organization. So yes, we can take a look into all of those metrics in isolation, but once you start looking at them together, as well as integrating some financial metrics, and you are able to see this insight where the focus needs to be a lot more on how do we actually operate and manage people within the organization, and not necessarily about any specific individual, their feelings within the organization as an outlier, isolated case, but more so, what is the ecosystem that we're building that is going to drive productivity and performance within the organization? Daneal, anything to add from your standpoint?
No, I think you said it very well. I just think of that, employees do cost money, and we see them on, an income statement. But what we're really talking about is the upside that you get from people, right? The output. It's if you can enable them, if you can train them, what is it that's going to unlock that? The difference between the cost of people and the output and the upside of people. I mean, I really do believe that people are an appreciating asset, but how do we get that appreciation?
I totally agree with you. I mean, as you both know, obviously founders, when they start a company, if it's one founder, two founder, whatever it is, they start working. And then at some point, they're like, wait a minute here. There's too much work here, for all of us to do, or there's a skill that we don't have that we need. And that's when they start to hire people, whether it's full-time, contract, whatever it is, right? So that's how companies build. And so, obviously you've got a group of people for a certain reason, for their skill sets. So the idea is that they're there because of their expertise, treat them that way. But I mean, I guess it's sort of easier, said than done. So I really want to ask this question about, AI, because that's sort of, what I've been sort of playing in for the last 2 years. Why does this conversation, so we've had a good conversation so far, why does this conversation become more urgent in a world shaped by AI, budgets, rising pressure for productivity?
Yeah, I think this conversation about employee lifetime value is ultimately a conversation about performance and productivity within any type of organization. And if we position any organization ultimately within a broader context, and as you mentioned, we did take a look at the Canadian tech firms. But what do we see kind of from the Canadian economy standpoint? We're facing pretty challenging times, at least in my opinion, with a lot of capital moving outside of Canada. We do have debt markets that are becoming a little bit increasingly tighter and more strained. And on top of that, we have our neighbors to the south who are not necessarily being very friendly with tariffs, and that's puts an additional strain on our ecosystem here in Canada. And on top of that, we naturally have the AI as a big disruptor that is going to play a role in performance and productivity space and is going to drive changes in the labor market one way or another. So all of those are naturally going to become considerations. So I'm not surprised that a lot of companies right now are looking into productivity and performance and any type of ways to optimize it to make sure that we're being productive as company and as Canadian society more generally. However, even in the context of AI and the labor market, the answer to me again comes back to how do we actually design the organizations? And if you think about AI, it ultimately is a tool, right? And the tool needs to plug into the system. So if your design at the highest level, and I'm not talking about names in the boxes on the chart, I'm talking a broader ecosystem of the organization, is very messy and is unproductive, and introducing an additional piece into it that is going to introduce a lot of complexity, that can just create the entire bowl of spaghetti. And that not necessarily is going to be very helpful for anyone. Perhaps it's going to taste delicious, but it is going to be very messy and so very confusing for a lot of people. I don't know about this analogy per se. But
Anytime
my
you
belief,
add food into it is, always a good thing. I mean, I'm Jewish, so I love food.
If you
So,
can
I
add
mean,
chocolate, then it's even better.
there you go, there
chocolate,
you go.
whatever you want.
So ultimately, my
Go ahead,
belief
sorry.
is that into the productive effort, right? All of the organizations need to be focused on productivity. All of the organizations need to focus on performance. And I think that this is what's going to bring us to the winning side of the equation. So what I mean is thinking about individual enterprise and creating capital, creating investments that we're making, introducing AI for the purposes of the productivity, so that we're able to produce more outcomes out there, bring them into the market, and feed our economy so that we're able to go and hire more people and create those jobs for people within our ecosystem. And then you kind of have this self-propagating engine that focuses on investments that are focused on productive effort rather than any type of superficial things that we might add on top of each other.
Daneal, do you have anything to add to that?
Nope, he nailed it.
One trend that I've been seeing, I mean, Konstantin, you were talking a bit about how you structure your organization. So I probably can count at least 5 or 6 tech companies that I know of where they're actually taking their HR coordinator role and they're transforming it. Right. So now they're hiring like AI builders. So, and they sit right in the HR team and they focus on, a bunch of different things like, automation, workflow, not only, for HR, but also for the business as well. So, I think it's brilliant and I like how it's going. So instead of doing what other companies have done where they've laid off or let go of all of their HR folks and just say, yeah, so a tool is going to manage HR, they're actually rethinking how we actually practice this business function so that we can create more value. And I think it's absolutely brilliant. So here's a good question for all of our CEOs and CHROs listening today to this episode here. So what is, and they want to modernize how we think about talent, performance, ROI. What are 1 to 3 practical shifts they could or should make now?
Yeah. So I'm gonna mention 2, and the first one I've kind of touched on, which is retention, right?
Yeah.
Defend the retention cliff. And when I say the retention cliff, it's the 80%, getting to the 80%, make that a target. Because as I said, we saw when you get to that 80%, there's a X in the employee lifetime value. So it's not a soft metric. So as a business, quantify what is retention worth in your business. You've quantified it for your customer. Now quantify it for your employees and make strategic bets on retention initiatives. Figure out how much they're going to cost you and what's going to be the ROI, and look at this in a scientific way. You come up with your hypothesis, you make a bet, you know how you're going to measure it, what comes about. And that is exactly what I've done, as a fractional. I've been working with Constellation Software, and they've made some retention bets that have paid off. And when we looked at our 84 companies, they were in the top 75 percentile. And this is not about them, but it's what makes the companies in the top 75 percentile different. Like, why are they getting more, overperforming in employee lifetime value? And I'll tell you why. It's retention is one of the biggest levers, but also, as Konstantin said, they're not necessarily the ones with the biggest teams. In fact, they run quite lean. They have very reasonable cost per employees, but they outperform when it comes to the performance. So it's almost like you can think of it as margin, right? They outperform. So their average revenue per employee for those one in the 75 percentile was $360,000 revenue per employee, which is really good. Higher tenure, 6 years on average. That's great. If you can keep someone 6 years, that's great. 83% retention rate. So again, over 80% is what we call the cliff. So that would be the one thing. The second one is, and going back to your AI point, is, there's an opportunity now to redesign roles to maximize performance in every single role that you have. And this just makes sense with what we've been talking about, right? Profitable growth, AI. What we found when we modeled an AI scenario where there's a 20% increase in revenue per employee because of AI is it increased ELTV by 67%. under the same cost and tenure assumptions. So what Konstantin and I are going to be doing is we're going to be building out an ELTV calculator that allows people to model different scenarios, which is really, really exciting. So I just say with all different roles, asking yourself, what's the outcome of these core roles? What's the value? And, what I would say with the tasks that are higher value, obviously you want to how can I add AI in there? Obviously with things that are lower value, you want to relocate or get rid of. And ultimately, you're driving for a higher output per employee. And I think we've all been in roles where we know, I've never been in a role where I didn't think that there could be either more efficiency here and I could reallocate my time, or I could drive better performance and focus more on the things that matter.
No, good. Konstantin, anything to add to that?
Yeah, absolutely. One of the words that's been on my mind is leverage. Is how do we create leverage within the organizations? And I think Daneal was summing that up quite a bit. But I do think that CEOs and CHROs need to put that word to the front of their minds and think about leverage on a consistent basis. Very recently, I was pitching one of the projects looking into helping an organization scale from 70 million to 120 million. And as I was looking through the assumptions that the company was making, they essentially assumed a linear growth. So you add a headcount and your revenue ultimately grows over a certain period of time. But the question then becomes, why are we not considering an exponential growth? And perhaps in here is because we're looking at revenue and talent metrics as separate. But once you look into revenue per FTE as an example, you're ultimately looking at about 6% increase over a number of years, which is not a significant amount, especially considering that we're entering that environment, Jeff, like you mentioned, with AI professionals entering the workforce to help us find that leverage within every single organization. So I do think that looking at your processes and trying to figure out what the leverage is within the organization is ultimately, it would be my recommendation.
Yeah, fantastic stuff. So here's my last question for both of you, because I like to ask this question of everybody, is if people are listening to this episode today, so what is one thing that they can act on from this conversation, today? Just pick one core thing. Daneal, do you want to start?
No, I'm going to give that to KT, Konstantin Tskhay.
Okay, Konstantin, you're on.
I'm thinking.
I'm very pragmatic. If you know me, I tend to go into very specific, actionable, small steps that people can take right away. And I would say it probably would be to sign up to receive the reports so that you can dig deeper and learn about the methodology, data, and everything. And this is not for self-promotion purposes. This is just dig a little bit deeper into understanding of the research itself, and then seeing how to connect it to your own business. Because it's one thing to listen to an episode when we're talking, but written content goes much, much deeper into all of the different constructs and helps to connect the dots between kind of those HR and financial metrics. So it's a very pragmatic one. I'm going to throw it over to Daneal now.
Yeah.
So speaking of that, sorry, Daneal, go ahead.
Go, Jeff.
No, I'm just going to say, where can people access this piece of research? Where did they go?
Well, we have 2 webinars coming up where they can hear all about it, and TAP has it on their website. If you go to our LinkedIn, we're promoting it. So, but if you are a TAP member, you get and you've participated, paid to play, paid with your effort, then you will get the full report. We see this as long term, so you can also sign up to be part of next year's data. And we encourage that.
Okay. So we will share all of the links, everybody. So not to worry. I know all of you are very nervous about it. So not to worry. I will quell your fears. Your nervousness will be gone. All of that. Any last minute parting comment to both of you? No?
I'm just so excited that we can finally be part of your Unmuted podcast.
So this is the Unmuted podcast. So my name is Jeff. I'm the founder, host of the podcast. where we talk about all things HR, HR tech, world of work, AI, leadership, all of that good stuff. Both of you, Konstantin Tskhay and Daneal Charney, thank you for being here.